Hey guys, this is BA here. It's Saturday, July 22nd, 2017, and haven't made a video in a while, so I thought I would include one as an addition to the series I've been writing on my new project, Project 5110. Hey, this is my third attempt at making this video today. I haven't made one in a while, so give me just a second. Make sure I've selected all the right start buttons again. Yeah, I think we're looking good. We're on track. So, hey, let's get started. Project 5110. It's my new project, new approach, and it's how 5 ticks a day in a year or less can actually get you to 10,000 a month. And that's what I want to show you today, is how that's possible by using my projection model, by demonstrating to you that trying to get the low-hanging fruit in price action, meaning the easiest stuff to get to, selecting the low-hanging fruit for your profit targets, your daily objective, and when you combine those two with a statistically proven system, method, something that has a statistical edge, a positive expectancy, then you can get to the 10,000 a month. The objective is to use fund an account for 10,000 a month. Continue doing what you're doing, buying mutual funds, buying stocks, selling options, but fund an account $10,000, and try to, over the course of a couple of years, 2 years, get into a position where you are potentially making a very significant monthly income. So I'm going to show you how you can do that with low-hanging fruit, a couple hours a day, to be able to get to that. Again, I'm not trying to sell you on anything, get you to shift what you're doing, tell you that this is the best way of doing it. It's not. It's just an approach, my approach. And I just want to share with you how I arrive at how I approach this. Number one, developing the trading strategy that has a statistical edge, and then putting context around your trading objectives and applying money management in order to get to what potentially could be some phenomenal returns. So let's get started. First thing I want to do before we get to the projection model is I want to show you, this is crude intraday from about 9:30 till a little afternoon on Friday, this past Friday. Pardon me? What I want to show you, crude has typically 10 to 15 opportunities every day. And what I mean by opportunities is one opportunity is a 5-tick scenario. It's what I'm trying to do. I only need one to hit my objective every day. Crude has between 10 and 15. Every market I track, I collect data on, has between 10 and 15 trading opportunities every day. So why is that important? Knowing how many opportunities you have. Well, for one, if I traded a method and I was day trading, and my average for every symbol I looked at only showed me 1, maybe 2 opportunities a day, I would approach it very, very differently than I approach a methodology that provides me 10 to 15 opportunities every day. There's plenty of room, margin for error, margin for making up for errors, I should say. All right, so let's take a look at this. Okay, first off, magenta equals I'm only taking short trades, whatever I'm trading. Cyan means I'm only taking long trades when my method materializes. Magenta short, cyan long. Magenta short, cyan long. Magenta short, cyan. This is an exception to the cyan. I don't need any indicators up there to tell me that this is an exception. So I have a variation to my method that takes advantage of this right here. Alright, so what I'm going to do is just draw some ovals around the trade opportunities. And I know what you're saying. You're like, well, yeah, you could put ovals up around anything to show that you had profitable trades. But, you know, after tens of thousands of data points that I've been collecting, I can tell when I would enter just by looking at a chart. So we have one here, here, even that one would have fired. A little bit of drawdown right there. Alright, so those are the opportunities. Each one of those gave us at least 5 ticks of profit. Now, there's no way I'm going to sit here and tell you that, I mean, this strategy, just you step up to the plate and you have to hit the ball. That's all you have to do. So you don't enter here and ride this all the way down. No, that's a low probability trade. That would work, but again, it's, you know, I want win percentages up very high. You know, above 80% is what I'm looking for, and in a directional system. So you only achieve that with these short-term trades. So this is how many opportunities you had in crude from 9:30 to 11:30. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah. Yeah, 11. That one where you'd taken some heat on, you wouldn't have come out. Yeah, you'd only been down 18. Only about 6 ticks. You would have been down on that one right there before it came back up and hit your target. So you had 11 opportunities from 9:30 until 11:30. You would not, and with this approach, you would not have taken no more than 1 trade. And that would have been the first one. At about 9:35, 9:34 we'll call it, you would have hit the alert, and that would have put you in short crude market. 9:36 you would have been out. You would have been out for your profit target. 5 ticks minus commissions and fees is $43 profit. So $43 net after everything. Your profit target is hit. You don't need to trade crude anymore. You know what you're saying? Yeah, but you got between 10 and 15 opportunities and you're only taking 1 trade. Well, let me show you why. Again, I like to make projections on what I consider the lowest rung on the ladder. What you could expect to achieve the least. That typically tends to be, in the long run, what everything your performance gravitates to. So in my projection model, I make projections at very, very low figures. So for example, let me adjust this. Alright, so here's one of my projection models. So this model here adds 1 trade unit every profitable month. Now you might be saying, yeah, you're not going to be profitable every month. Well, there's trading a method like this, you have a very, very high probability of being profitable every month. All you have to do, there's only one place I know that does this live in front of everybody. Their methods aren't quite like mine, they're close, but the CFRN guys trade this live in front of everybody, 2 hours every morning, and I don't think they've ever had a losing month. You know, for all the years that they've been doing this in front of live in front of everybody. So they've got records that go back and videos of the trades they make. So no hokey pokey there. It's another short-term high probability trade method, just like this one. All right, so we add one trade unit every profitable month. Now, do you have to? Absolutely not. If you want to take 2 months and trade it at that size before you move up, hey, do that. Nobody's saying you have to. This is just a projection model. All right, so this model here on the left is months, so we're showing 2 years. This column here is the number of symbols we want to trade through the trading day. Here I show that there are true trade windows per day. 9:30 to 11:30 is the single most liquid and active time in the markets for any market you want to trade. You want to trade Forex, you want to trade pound, you want to trade euro, you want to trade stock index futures, the DAX, you want to trade whatever it is. If Gringo is up trading as soon as the market opens, everybody tied to the Gringo's markets is very, very active. The second best window is from 1 to 4. So if you want to trade 9:30 to 11:30 and say 2 to 4 every day, those are 2 very good trade windows. Like I said, crude has between 10 and 15. Everything else I monitor has about the same. So you know, gold, stock index futures, not the S&P. The S&P is just lousy right now, but NASDAQ, the Dow, they both have you know, 10 to 15 trade opportunities a day. Microsoft, U.S. Steel. There's a whole lot of stocks that fit this category that have those opportunities. You just can't trade those with a $10,000 account and get the same oomph. But your future markets do. You can trade the pound, you can trade euro, you could trade gold, crude, all of those markets right there, you know, with a $10,000 account. So, all right, so 2 trade windows per day. This is number of contracts per trade. So all this is incrementally, you know, month 1 we start with 1 contract. If we're profitable, month 2, now we trade 2 contracts. What you want to make sure of is when you get down here and you're trading, which the model doesn't let you do that, you're trading 10 contracts. This column over here is your total account value. You want to make sure, you know, you have most of the futures markets, the margin in those are going to be 3,000 and some change. So just make sure you don't have, you're not, of course it won't let you trade above your margin requirements, but you may be saying, why would I ever, I mean, I've got 32,000 and I'm slinging 10 contracts. Well, yeah, simply because, remember we said that we want you to not stop what you're doing in your other markets, your retirement account, your stock trading, your mutual fund buying, your option selling. Keep doing that stuff, your real estate investment, your normal business, whatever you're doing. Just fund this. The objective here is to try to get your original initial investment out so that you're trading with house money for the rest of your life. That's the objective for this right here. So it doesn't really matter in this account. Listen, if you've gone 5 months and you're hitting the profit targets, then all you do is you just keep ratcheting up until you get to a point where at some point in this model you're going to find your comfort zone, and that's where you probably need to stay. Some people are wired differently, where they can just their comfort zone is wherever. Other people may be 5 contracts a month, could be 10. You could trade there for the rest of your life and make a very good income doing this. So anyway, back to the diagram here. So this is profit objective per symbol per window, and this is total objective. This is your total objective for the day for each symbol. So if I'm trading crude, in this projection, I'm only looking to take out $20 a day in crude. And that's after fees and expenses. We'll talk about this in more detail. So these are what you would potentially make in a week, potentially make in a month, your cumulative, your total account value, your monthly return on capital, your total return on capital. That's how the model's laid out. So now let's delve into it a little bit deeper here. So let's start out with month 1. All right, month 1, we only want to trade one symbol. Let's say that's all you have the screen real estate space for. That's all you have the interest in doing, one symbol. There's 2 trade windows per day. We're going to make the assumption that you can trade 2 hours in the morning, 2 hours in the evening. You start the first month with 1 contract. So your dollar target per symbol per window is $10. Your total for crude is $20 for the day. If you're averaging $20 a day, then you're going to make $100 a week, $400 a month. Okay. So let's talk about the logic behind that. And I know what you're saying. You're like, you expect me to sit in front of a screen for 4 hours and take $20 out of the market for an entire month? Well, this is for demonstration purposes, to show you what you could do with one symbol trading along this approach. Again, low-hanging fruit. And once you have the positive expectancy system, which is targeting very, very short-term moves. Now, you don't have to have cat-like reflexes to trade this strategy I'm trading. You have plenty of time to trade multiple markets and enter these trades. And you're tracking 4 symbols. The most you'll ever have positions on that I've seen is 2. There are times when 3 symbols kick in, like if you're trading NASDAQ, Dow, and crude. There may be a time when they're linked together and all 3 of those will hit, but that is very rare. You'll have a lot of times when you're trading, you have 2 open positions in any one symbol, but the majority of the time you're just going to have 1 position open. Alright, so in front of the screen, 4 hours a day, and you're taking $20 out of crude. Why 20? When I just showed you that there's 15 opportunities, 10 to 15 opportunities every day in one market. All the markets I track have that same amount of opportunities. The trade opportunities are very important. Well, this is the confidence. Once you have a strategy like this, your objective, let's say you go in and you hit the very unlikely event that you have 3 losers in a row. Well, you know you typically have, out of 3, if you have 7 more opportunities potentially to come back and chip away to get to $20 in profit for the day. That's what you're scratching and clawing for. $20 profit per day per symbol. So for those days when you come in and you shack it right out of the gate, 5 minutes after the market's open, normal trading hours, you got your profit, then you're done in that market. Then you concentrate on another market if you're trading multiple symbols. You can approach this in any way. I'm just, again, trying to show you what the low-hanging fruit results are. And then you can go from there. You could make your own projections. So let's take a look at it. So in one symbol a day, trading two different windows, one contract, 20 bucks a day. Month number 2, how are we looking? Now we're trading 2 contracts. We're at a rip-roaring 40 bucks a day, 800 a month. If you clear that second month and hit your objectives, you got 12% on your money in 2 months. All right, now let's look down here at month number 12. All right, month number 12, your monthly take, you're trading at roughly 12 contracts. Again, if you're comfortable doing that, you're taking in roughly 4,800 bucks a month. So now you've got roughly 41 grand in your account. You made an astounding 312% on your money in that very short period of time. You've continued doing what you're doing in your mutual fund, your stocks, your options, your whatever else you're working on, but you're just continually chinking and grinding this out. Some of you may want to stop there. If you're comfortable at 12 contracts, maybe you're comfortable at 10, and then you add another symbol to the mix. So, you know, there's all kinds of ways to approach this. But month 12, let's say that you've gone through 1 year and you're very comfortable with what you're doing. So now you start ratcheting up even more. So you go down to month 24 and you carry it all the way through. I mean, you're trading with house money, guys. This is not, it's yours, but it's money you've taken from the house. So your total account value after 2 years is, you know, somewhere around $130,000. 1,200% on your original $10,000. Again, this is taking $20 a day out of one symbol. The math remains the same as you move through time. You're just simply adding more contracts every month that you're profitable. There's all kinds of ways to adjust this algorithm here, but this is the most simple algorithm to use. It's aggressive. I have a method that automatically adjusts contracts. It's not as aggressive as this, but again, when you get to a point where you're playing with the house's money, then you know you can. Once you get to that point right there, then the next thing for you to do is to figure out where your comfort level is. Now, some of you may not ever be comfortable trading 24 contracts in the markets. Maybe not after 2 years, but I mean, you're at 9,600 bucks a month in 2 years. So, and I know what you're thinking now is like, hey, you told me that your project's 5-1-10, that you can in a year or less, you know, get to potentially 10,000 a month with 5 ticks a day. Yeah, let's just add one more symbol. Let's say you're really good. You just add another symbol to the mix here. Let's look at month 12. Hey, you're at 9,600 bucks a month. Month 12, trading 12 contracts. That's within anybody watching this can sling 12 contracts. Once you've traded this a lot, once you have 1,000 trades under your belt, you'd be able to trade 12 contracts. Now, I'm not saying that somebody starting out in this method would be able to go the first year if they've never traded before and go from 1 to 12. Maybe they could, maybe they couldn't. I don't know. There's a lot of factors involved in that. I just want to show you, from demonstration purposes, how this is possible, how the math works, how combining a high probability system with high probability profit target, high probability objective for the day every time the market opens, how that can actually work over time. So again, the reason I'm picking these low figures per symbol is I'm trying to allow for those days that just start out rough, and every market has them. They certainly don't last, but every trading methodology never wins all the time. So I think the most I've ever lost in this strategy right here on any symbol was 3 trades in a row. So that's kind of the in all the trades I've captured. 3 trades in a row is the most we've ever lost in this thing. So that's kind of what I'm doing. So you lose 3 trades, you get 7 to 10 more opportunities to continue trading through the day to get back to a $20 profit after fees and commissions. I mean, that's the crucial part of this. That's what makes it work and tick, is that $20 per symbol per day. So hey, I hope this was informative. I hope this shed a little more light into what I'm working on, what I'm thinking, how I approach this stuff. So the next thing is I've got to collect a lot more data to verify, confirm, and become more familiar with the markets that I intend to trade. And then there will come a point in time where I put this into practice, into full-time practice. So I'm really excited for when the day comes when I do that, and we'll trade in accordance with the model, try to hit the objectives, and try to stay on track. So anyway, hope again this was informative. Appreciate you guys tuning in, watching this, and hope you guys have a nice trading week ahead of you. This is BA signing out.